Right, we are recording and good to go. Thank you so much for joining us for HRAI's webinar on the Tariff Remissions. Today we'll be joined by Martin Limas, Vice President in Government and Stakeholder Relations with HRAI, and William Pellerin, Partner with McMillan LLP. They're going to take you through some really important information, and we will have time at the end for questions. If you'd like to ask a question, please look at the bottom of your screen. You'll find a chat box and a Q&A box. You can put them in there, and we will get to as many as we can. We'll also give some contact information so you can reach out at the end with any further questions or any follow-up. And just one last note, this will be recorded. It is being recorded, and it will be on HRAI's YouTube page as well for future reference. So at this time, I would like to invite Martin to join us on the screen to get the presentation started.
Thank you, Matt. Is the presentation ready to go? You're going to flip it up?
It is. I'm going to leave and put it up right now.
Okay. Well, welcome all. It's been some time since we've had a session like this, and you know, the world keeps shifting, things keep changing. But on this file, not a lot has changed, unfortunately. We really still don't have the certainty that we'd hoped for by now. Just flip the next slide, Matt. These are the things we're going to cover in this session. I'm going to do a very quick update on where we're at, and it really won't take very long. Because not much has happened in terms of that's relevant to our sector, to be quite honest. Then we'll talk a little bit about the impacts of tariffs on the Canadian economy with some help from some economists who have been looking at the matter. And then we'll hand off to William Pellerin, who will talk about the remissions process. Unfortunately, it looks more and more like that's a process that members will have to take advantage of if they want to get some relief from the onset of tariffs. So we'll talk a little bit about that. We'll give all kinds of room for William to talk about what's possible. And then we'll leave time, hopefully, at the end for questions from members on how to access that process or any other questions you might have. Next slide, please. So that's, I'll do a quick update. And you might recall that we haven't had really a big conversation about this since the big announcement in April. And if you remember, next slide, we were expecting on April 2nd, Liberation Day was what it was called, that Canada was in for a world of hurt from the US president. Instead, what we got, next slide, is he focused his attention on the rest of the world. And you might recall the announcement in the Rose Garden behind the White House included almost every other country on Earth except Canada in the list of tariff who the US government was going to go after with tariffs. So should Canada feel relieved as a result of that? That's a big question. I'm going to say the answer is I don't think anyone's felt relief. Next slide. In fact, this is probably the most graphic way of illustrating the business uncertainty that's been felt in the Canadian economy. Nothing like it. The closest we've ever encountered was during the previous Trump administration, and that was relatively calm by comparison to what we're facing now. It's like off the charts, the level of business uncertainty, which of course affects investment, job growth, and a whole lot of other business decisions. Why is that? Next slide. You know, we're not really sure what to expect. It's first we talked about 25% tariffs, then it was everyone said, you know, we should expect 10% tariffs across the board. Now the number is more like 35%. That's what we're hearing from the president just in the last week. We really don't know where we're going to land. Same for deadlines. We've had various deadlines thrown up, and people say, you know, we need to work towards these important deadlines, shifted from April to March, sort of March to April, and now to August 1st. I don't think anyone believes we're going to hit that August 1st deadline that's later this week. And it doesn't seem to be a lot of optimism on both sides between Canada and the US that deadline will be met either. So where are we? That's where we're at. Obviously, that all affects our industry. We don't really know what's coming. I don't know that William will have any more certainty. He might be able to share some insights from his perspective on what we might reasonably expect. But what we do know is that that level of uncertainty has had negative impacts. And even with the modest level of tariffs that have been imposed so far, we've seen impacts. These are some charts produced that were shared in a speech by Tiff Macklem, the governor of Bank of Canada. And I'm going to say the effects are pretty dramatic, but still not even what we would reasonably expect under a full tariff regime. This is still in anticipation, for the most part, of tariffs. And we've seen that the level of exports and imports were pulled ahead somewhat in anticipation of tariffs. There was a growth in both imports and exports, anticipating tariffs that were promised by the president upon his election. And you can see since then on an index, these are all indices that we're using here, where 2023 is 100. So this is all relative to 2023. And at the current moment, we're down about 15% on exports and about 5% on imports into Canada. We're also seeing slight growth in exports and imports with other countries. That's exactly what you would expect. Still against 2023 being 100, we're up about 20% on both counts. Next slide. Employment in sectors reliant on exports to the United States, not surprisingly, that's the purple bar, are down relative to the normal index. Next slide. Similarly, the employment outlook is weak, especially for sectors that rely heavily on exports to the US. Again, these are all unsurprising. The actual numbers probably will drop even more significantly when and if a new tariff regime is imposed. That's when businesses will actually make more firmer decisions. So meanwhile, on the flip side, this is something I picked up from the Canadian Chamber of Commerce, the Business Data Lab. They did an assessment of the impacts on the US economy of tariffs, US imposed tariffs, which are obviously going to artificially increase the cost of certain imports. And just as an example, they looked at the US housing market. And they said the average cost for a new home for a US home buyer will go up by $20,000 relative to what would normally happen under normal circumstances by 2027. Next chart. Next slide. Canada is a supplier of 3 key materials: lumber imports. 69% of US lumber imports come from Canada, 25% of imported steel and iron, and 18% of refined copper imports, all very important to the construction process. Based on that, next slide. Business Data Lab shows some pretty dramatic increases in the cost of producing a home in the United States. The next chart shows it even more clearly. The bar on the left is the baseline in a scenario with no tariffs. The bar on the right in 2025, this year, and in 2 years hence, the expectation is that the cost of these inputs will result in a $12,000 increase in the average home this year, and as much as $14,000 by 2027. So these are impacts in our sector that are fairly predictable based on the current scenarios that are being shared. Okay, so that's as far as I want to take it right now. I know there might be some questions that people might have around our own efforts to seek relief through exemptions, and we'll maybe come back to that in the Q&A, because there's a little bit to share on that front. But for now, I'm going to pass it over to William, who will talk about the remissions process. Thank you.
Hi, everyone. Great being here. So my name is William Pellerin. I'm a partner in the international trade team at Macmillan. For those of you that are not familiar, Macmillan's a national business law firm in Canada, offices coast to coast. One of the things we do particularly well is international trade. So I co-lead what is the largest international trade team in the country. So we're at the heart of all things trade and tariffs. We're in with the Department of Finance, working on remissions constantly, and have a large team supporting businesses, US businesses, Canadian businesses, you name it. So with that, maybe Matt, if you can put up the slides. Perfect, just keep them going. So Yep, next slide. And might as well jump. So yeah, I'll just start by talking about very quickly the latest on tariffs. Martin did a good job there. You all read the news. The purpose of this webinar is not for me to recap what's happened in the news. It's really to get to the crux of it, but I do want to put up two tables really quick. So next slide. So this is a high-level table of everything that the US has basically done on Canada, and gives you a sense of the high-level kind of approach overall. So it all started March 4th when those fentanyl tariffs were imposed. A lot of your products for your industry were hit as of March 4th. Steel and aluminum tariffs came into place at first at 25%. Those increased to 50%. March 12th is when that started. And then the auto tariffs hit April 3rd. And then, as Martin noted, there were reciprocal tariffs April 3rd, but those currently don't affect Canada unless things change. So let's go to the next slide. And this is the flip side. So this is when Canada retaliated and what Canada has done by way of retaliation. So right after the US hit Canada, Canada hit back. And again, that goes to a lot of the products that your industry is involved in. So March 4th, there was a further round of retaliation, primarily to kind of mimic the US steel tariffs, March 13th. And then we imposed our retaliation on April 9th. There's been a number of other remissions and exceptions that have come into force throughout June, primarily to remove some of these tariffs on a product by product basis, as well as more generally, goods that are used as inputs into Canadian manufacturing are also now exempted from these tariffs applying. Let's keep going. I want to just very quickly mention that tariffs are one thing, but as you probably all know, a large number of government procurement obligations have also changed, and there's a number of procurement opportunities where U.S. producers are no longer permitted to bid in government contracts, and that includes provincial contracts and federal contracts. And so for some of you, you're well aware of this, but it's a big part of the framework and the retaliation that Canada has been putting into place. The next slide. All right, so now let's get into the weeds of things on understanding your exposure to tariffs. Now, we've been at this for many months. Many of you will be seasoned pros at this. So I'm going to go quite quickly, and if you have questions, by all means, put them in the chat and let's discuss. Next slide. So at first, I want to really lay the groundwork here. You may be a small company, a medium company, or a very large company. Our experience has generally been the same with our clients, irrespective of size. The level of sophistication on matters of trade has not always been very high. And that's not a diss on your company. It's a reflection of reality. When you trade with the United States on a zero tariff basis for decades and you have relationships across the border, your tariff classifications and the way that you're valuing the goods were probably not perfect. You probably did not spend a lot of time or resources doing trade right, because ultimately it didn't really matter, right? Whether you classify it properly under this code or you were doing it really quickly and you thought probably the best tariff code was this other thing, they were both zero, so who really cared? Well, now in an environment where some of the tariff codes are at 25% and others are at zero, all of a sudden you're probably rethinking a lot of your importations. You're working with your customs brokers, you're working with your lawyers, and you're thinking about ways where you can actually be saving money. And you're also looking at your contracts, right? So in many ways, you have different Incoterms, right? These three-digit words, terms that I put a few here on the right-hand side, like X works and FOB and DAP and DDP. Many of you maybe 6 months ago had no idea what these things were, or you had them in your contract, probably didn't actually fully understand what they meant. Now these things are extremely important, and they reflect who actually pays the tariff contractually within the parties. And that's really important because let's not forget, the importer is always the party at the border that pays the duties. That's a requirement of Canadian law. It's a requirement of US law. So if you're importing into Canada, US product, if you are the importer, you are paying CBSA, the Canada Border Services Agency. But contractually, you might have a right to be reimbursed by the seller, right? So if you have an Incoterm that is DDP, which stands for Delivered Duty Paid, then what that means is that even though the importer paid the government agency, it is the seller that has to reimburse you for that, right? So, and frankly, it's only DDP that puts the responsibility on the seller to pay the tariffs. Everything else, it is the buyer that is responsible for the tariffs. Risk changes at different levels in the chain, risk of loss and so on. But with respect to the payment of tariffs, it is only DDP that really matters, because that's the one where the seller takes contractual responsibility for the duties, irrespective of who actually paid them at the border. So what we're seeing, and what you're probably seeing, is a lot of changes in your contracts, in your POs, clarifying who actually has liability for what. And maybe you're using Incoterms, or maybe you're simply explaining it in more words and making sure that it's well understood. We are working with a large number of companies that have renegotiated contracts, that have tried to break contracts, to make sure that they weren't on the hook for tariffs. In some cases, up until now, one of the parties may have been eating the tariff for a bit, hoping that the situation resolves itself. We're seeing less and less of that now, and especially after August 1st, if the tariffs are not going away and they're going to be, solidified for many more months, then those parties that were hoping on a temporary fix and were eating the tariffs temporarily might change their minds and start passing it on in a more realistic way, or longer term way. So let's jump slides here. I'll come back to these ideas. So I want to talk about kind of the pillars and the core things that I think it's very important that everyone understands when you're dealing with tariffs. So there are 3 key concepts, and by now you maybe have a very good grasp of these, but I want to understand that almost everything that deals with tariffs relates to one of 3 concepts. Okay, it either relates to origin, tariff classification, or value for duty. We'll play around in the margins a little bit, but these are the 3 core concepts of tariffs. So origin, right? Canada is applying a counter tariff on products of US origin. And the rule of origin relates to not the CUSMA or USMCA rule of origin, but special rules called our marking rules. And so each product has a different rule that tells you what it requires to be sufficiently transformed to become of a specific origin. So if a Chinese product or an EU product goes into the United States, spends 6 months in warehouse, and then comes to Canada, that product is not caught by the tariffs that we have imposed on the US, right? That product is not a US origin product just because it spent some time in the United States. So very important to understand, of course, that different things would have to happen to that product. There would have to be some level of transformation. And to determine the proper level, you actually have to look at the rule for that product specifically. So every product has a different rule to determine whether it has been sufficiently transformed or modified in the United States to gain US origin. And the same is true on the US tariffs also, right? The US has their rules of origin to determine whether something originates in Canada or meets the USMCA CUSMA preferential rules such that the tariffs don't apply going south. So origin, in terms of how much of it is made in Canada, or made in the United States, is a key concept in all of this. Tariff classification underpins everything. So tariff classification, here we're talking about the HS codes, or what Canada calls HS codes and what the US calls HTS codes. And that's a key distinction, by the way. Sometimes we often see our clients refer to the US tariff codes. Those are not the same as in Canada generally. So tariff codes are normally They can go up to 10 digits. The first 8 digits are really what matters for tariff purposes, by the way. So let's look at the 8 digits, right? It'll be, and every single product that you can possibly imagine in the universe has a tariff classification. Okay, so 8 digits, and they start from, you know, live donkeys to mushrooms to snails to supercomputers, going through, of course, gas furnaces and everything else. So you have to understand your tariff classification, because that will tell you where to look for your origin rule, but it'll also tell you whether or not the tariff applies, especially Canada's counter tariffs, which are actually just a list of tariff classifications that are now hit with a 25% counter tariff. And the remissions, which are the exemptions to the tariffs, are also, of course, based on tariff classification. So the only thing there, to the extent that we're seeing still some confusion, is that the US has a different tariff classification. There is harmonization up until the first 6 digits. So Canada and the US are exactly the same all the way to the first 6 digits. Generally, I think there's a tiny few examples. Most countries are aligned and harmonized to the first 6 digits, and then they start departing, and they're all over the map. So your tariff code for when you bring something into the United States, or when your partner brings something into the United States, and then has an HTS code, and then, but the product that comes to Canada will not be the same. So when you're working with your lawyer and your customs broker for the Canadian surtax, make sure not to give them, you know, the US HTS code, give them the Canadian HS code. So that's important. Finally, I want to quickly touch on value for duty. So origin, tariff classification, value for duty. The value is the amount to which the tariff will apply. So this is something that you may never have thought about for a very long time, because or ever, because it didn't matter what you valued the good at for customs purposes, because you were applying 0% on it. So whether the good was worth $1,000 or $500 when it's crossing the border and declared, it didn't really matter, because you were multiplying that by 0%, right? Well, now it matters a lot. If the tariff rate is going to be 35% or 25%, because that's what Canada is imposing as a counter tariff, it matters a heck of a lot whether you're valuing that at $1,000 or $500, right? And some of the value for duty stuff is really low-hanging fruit, like very, very obvious, easy stuff to get it down. So the obvious one is transportation costs and freight should not be part of your value for duty. They should be out of that. So if your price, your invoice price, which you're using, which is normally your default value for duty, is your transaction value, your invoice price. If that's an all-in price that includes freight and transportation, make darn well sure that you're not including freight and transportation in your declared value for duty, because otherwise you're overpaying the tariff, right? So that's easy. The other one is services. What you want is an X works price for the product, right? Factory gate, you know, leaving the point of shipment in the United States. And you don't want any type of post-assembly or assembly services, post-installation services, training, any type of anything else other than the pure good in your invoice price should be taken out. That should not form part of your declared value for duty purposes for the tariff. Okay. Then there's the really advanced strategies, which we're working on with some more sophisticated companies, which involves transfer pricing, for example, and actually moving some of your SG&A and your costs into the foreign country, so that when you import and pay a related party price, you're bringing it in at a lower value for duty. And there are legal strategies that you can use there, but you have to be very careful and know what you're doing. And so we're playing around with transfer price in legitimate ways in order to reduce the value for duty at the border, because it's not the resale price in Canada that will be your value for duty. It'll be that first price upon importation. So that's something that we do with clients and that we can talk about if you'd like. So I wanted to talk about these 3 core concepts, and then we can dive into the remission piece a little bit more now. And this is really the core of what we're doing with a large number of our clients in the trade space. So first of all, I'll jump on tariff. I'll keep remission for last. Tariff list advocacy, relatively straightforward idea. You may want products to be hit with retaliation, or you may not. And I'll use an example. Of course, if you're an importer and you purchase gas furnaces from the United States, in many cases, maybe certain products are not yet hit, right? We talked about April 2nd, there was a list that Canada had circulated a while back that was going to further add a number of codes, of tariff codes that were going to be subject to retaliation. Ultimately, that list never came into place, but a lot of people made submissions and said, well, please don't hit this product because it's absolutely necessary and it's not made in Canada, and all you'd be doing is, Canada shooting itself in the foot. So we were doing a lot of work, advocacy, lobbying, getting things off of those lists or making sure that they weren't put on the list in the first place. There are scenarios where Canadian manufacturers are actually asking for product to be put on a retaliation list. So put yourself in the shoes of a Canadian manufacturer that makes piping or tubing or any type of product that may be relevant to your industry, that makes that product and can no longer ship to the United States because the tariff is just too high. That company may want to advocate and has done lobbying, for example, to say to the government of Canada, well, if I can't ship to the United States, it's very important that the US product not be able to come to Canada. Otherwise, I have no market, right? I've lost my US market. I need my own backyard protected. And so there are a lot of companies out there that legitimately are asking for those types of increased in the list of tariffs. So all of this to say, there's a lot that you can do to advocate through your association or through your company to be vocal and make sure that the government actually understands. And you can't fault the government on this one here. They're dealing with thousands of products, and if you are not vocal, something's going to happen to you that you might not like. Other people will be vocal, and if you're not there making your voice heard, you're behind the 8 ball here. So the other one that we're working a lot with clients on is understanding the exceptions that already exist. And this is specific primarily to product coming into Canada, where the good might actually be subject to a tariff already. But it's also important to understand that there are exceptions built in to the customs tariff schedule, okay? So let me talk about the customs tariff schedule. The customs tariff schedule, going back to my HS codes earlier, right? Every product under the sun actually having an HS code. That's in a document called the Schedule to the Customs Tariff. And that's a massive document, thousands of pages, and it lists every single product that could exist and with the HS code that applies to it. There are 97 chapters in the customs tariff, 97 normal chapters that will list what I was talking about earlier, right? Steel products, wood products, donkeys and fish heads and supercomputers, right? But there are 2 chapters at the end of that, chapter 98 and 99, that are exceptions to the application of normal tariffs. And those continue to exist. And so there are certain products that actually have 2 types of tariff codes. Like they'll actually have 2 different classifications, okay? So you'll have a tariff classification under a normal chapter because that's what the product is, but then they'll have a special exception tariff code also. The obvious one to think about here is, like, I'll just use the example, it won't apply to your industry, but your industry has some also, wheelchairs. Okay, so wheelchairs are classified under their normal classification, I don't know, chapter 45 or something of the sort. But there is a chapter 99 product line that says disability related goods. And so even though wheelchairs might have a tariff, because it also has a chapter 99 code, as a disability related good, no tariffs are payable. And there are a number of these chapter 99 exceptions that apply, for example, in the agricultural space. So if you're doing anything with respect to an agricultural company or project, that could reduce it. and there's a number of others also. And this is where you get into all of these things on duty drawback and other type of exceptions that apply if you're re-shipping the product out or it's being further processed in Canada and re-exported. So there's a large number of product exceptions here that you should look into if you're actually about to pay a tariff on a product. Okay, so that was tariff list advocacy, talked about what we can do and being vocal. I just wanted to put on your radar that there are these exceptions that already exist in the customs schedule itself that you should have a look at if you haven't done that already. And then that finally leads me to remissions, and I'll spend 5 or 10 minutes talking about the remission process. So what are tariff remissions? Remissions are exceptions to an existing tariff that currently exists. And many of you will know that HRAI, has worked on remissions for different products, or members have worked on remissions for different products because there might not be available in Canada, and they're currently subject to either the March 3rd or the March 14th tariff that was put in place. Anyone can ask for a remission, and if granted, they apply retroactively back to the date of the imposition of the tariff. So if you put in a remission today because there are certain types of, I don't know, screws that you need for your projects that are currently subject to a tariff, and they're not really available in Canada in the quantities that you need, or you're stuck buying because you have a supplier guarantee or an exclusivity contract or something of the sort, you can put in a remission application. And if that's granted, all the tariffs that you would have paid going all the way back to March 3rd would be refunded to you, and then going forward also. There are, and it's important to actually plan for this contractually. So if, for example, your counterparty is paying the tariff and they've passed on the cost to you. Let's say that you purchase goods that are imported, you purchase goods in Canada as a domestic sale, someone else is the importer. Okay, let's use that scenario. So you basically buy from a distributor or a wholesaler that acts as the importer. And maybe that company has passed on the cost to you, right? They've already passed on the 25% tariff to you, so now you're paying 25% more. Now, let's say that that importer distributor applies for and obtains a remission. They're going to get all of their tariff money back, and they're going to get a double win here, right? Because they've charged you 25% more along the way. So you might want to have a clause in your contract that deals with remission specifically, to the effect that if a party gets a remission, here's how we're going to deal with the remission refunds, right? So the remission, who will benefit from the remission? Will the importer be required to refund you the increase that they had passed along? Maybe that's a fair outcome. They're not required to do that. Maybe they can, double dip. But the commercial realities may suggest otherwise, right? So these are things that you might want to actually think about, because a lot of these remissions are now starting to be granted. I will talk about 2 things that have happened by way of remissions. So the first is that a remission was provided for by the government itself in mid-June. Okay, so without anybody asking or putting in an application. Normally you put in an application for a remission. Without any specific application, the government granted a remission for a number of different sectors, including health and national security and defense and so on, which probably doesn't apply to you. But one thing that they did do is grant a remission for any product that is used in Canada in manufacturing. So input goods are now subject to a remission. And you don't need to apply, you don't need to do anything. You just put the remission code in your customs entry when you bring that product in. And what will happen is the tariff will not be payable. Okay, so you don't need to do anything. The government has given you a remission code. Your broker has it. We can give it to you. And you just import, you apply the remission code. And that's if your product is for further manufacturing or for an input, right? So if you bring in, you've been bringing in resins from the United States to make some sort of product in Canada, it's the glue that you needed, or you've been bringing in screws or what might be for manufacturing something else in Canada, that input good is now no longer subject to a tariff. There's a remission granted by the government. So that's one thing. You should look at those to the extent that you're doing any type of processing or manufacturing in Canada. Okay, most of you probably doesn't apply, but I want to point it out because it is relevant. And it is relevant even if you're buying something from a Canadian manufacturer and they say, well, I've had to increase my costs because I've been bringing in these products and I sell this to you and now I'm passing on that cost to you. You might be able to go back to them and say, well, hold up. Didn't you get a remission here on all those tariffs that you otherwise would have had to pay? Why are you passing that cost on to me? Right. So that dynamic of understanding that remissions have been granted in the market is commercially very significant. Then there was another remission that was granted in the last month, and that was the first batch of remission applications that were made by Canadian businesses. And so there's a few dozen products now that have been granted a remission by the government for products that were otherwise subject to those counter tariffs imposed by the government of Canada. And so you can look at that list, study it, but make sure that if you're bringing a product in that someone else didn't apply for a remission, that really helps you, right? You should know. That way you can apply the remission code and make sure that when you're bringing a product in that you're not paying the tariff. And also, again, remissions apply retroactively. So if a remission gets granted, even if you're not the one that made the application and you've been paying a tariff or your importer has been paying a tariff, make sure that you understand and that you've looked at this list or ask your broker or ask your trade lawyers, has a remission been granted on this product? And if so, can I get my money back? Right. And so that's huge because we can be talking easily millions of dollars here for some companies. Okay, so what's left? The remission process itself and remission application updates. So lots of companies have been making remissions. Your company may have made a remission. You may have done it in conjunction with an association or otherwise. There is a massive backlog at the Department of Finance. We're working with them very closely. They're still only assigning analysts to the remissions for applications that were made in May and June. So they're way backlogged. These in the normal course take like 4 to 6 months to be granted, and we're not in the normal course. So they're trying to deal with it on a quarterly basis. So this last batch was probably the one for the applications that were received in March and April, maybe early May. Some of our clients were granted remissions, but those were made like in April. Anybody who's made an application in June, for example, those have not yet been dealt with. And so those will probably be granted in like August at the earliest, maybe September. So basically get your remissions in, get them in fast, make sure you're in the queue. And these are real packages, right? They have to hit a number of items. Very importantly, you have to explain why this product isn't available in the normal course in Canada and why you should not, or why it's not in the best interest of Canada for a tariff to apply. But normally your go-to is it's actually not made in Canada. Or if it is made in Canada, it's not in any significant supply and I have to pay the tariff, it's just not available. And with that, and building a strong case and showing what the product is, explaining very clearly and hitting all the different elements and showing what the cost is and what the price is and what the impact would be on you and your customers and on jobs and what it would mean for the Canadian economy. And you can put a compelling case in, your remission application. Normally, the ones that we put in that of the type that are granted are, 6 to 10 pages, and you have a number of appendices to support the case, right? Support letters from clients or end users, distributors writing in support letters as part of the application package to get a good job. You can do a remission that is far simpler than that, but in our experience, they take a lot more time to be granted, and there's just a lot more back and forth with the Department of Finance to get there. So that's what a remission application normally looks like. The government has on its website kind of a list of things that, you know, your bare minimums that your remission application needs to include. Just say one last thing. Remissions can be across the board for the HS code writ large, where everybody benefits. Those are called Schedule 1 remissions. But you can also make a remission on a company-specific basis and just say, well, for me, I'm stuck. I have to purchase this product, and I want the remission to apply only for my imports. And so you can do it on a company-specific basis, on a time-limited basis, and say, okay, I only want the remission for 18 months while I adjust my supply chain. I want it only for me, and here's why that should be the case. There are positives and negatives in going it alone and asking for a company-specific remission. Those are generally the only type that will be granted if there is a Canadian producer that actually makes the product in any significant quantity, because the government won't grant a wholesale remission in the normal course if there is Canadian production of that product. But they might say, okay, well, there's not enough, and you have a supply commitment or an exclusivity contract with the US company, or you have distributors in Canada that have no choice but to purchase this product. And so ultimately, the government will grant kind of a Schedule 2 remission that applies to your company only, or sometimes even just a specific amount of volume, or over a set period of time, which might be 6 months, 1 year, 18 months, 2 years, or something of the sort. So with that, I think that covers the lay of the land, and we're happy to turn it over to questions and answer and get into it.
I'm going to say, Matt, I don't see any questions in the Q&A. Do you?
No, and just a reminder, if you'd like to ask questions, it's really easy. There's a Q&A button at the bottom of your screen. Put them in there or in chat. We'll read them to William and Martin right now. Well, we got them.
And I have, I'm gonna in the interim, I'm gonna ask a question directly of William. That's legal, I guess, representing a law firm. It seems like at a very high level, I've been reading, and I don't know what law applies here, but it seems to me in the US, the president has been taken into account, and some of the actions have been caused legal challenges. Some of it, I think, is the basis for acting as the president, which is he's using the fentanyl crisis as a justification to take use extraordinary powers. Do you think there's any hope that at that level, the actions of the president in this regard will be challenged successfully? That's one question. And then I guess the follow-up is, what about international law? Like, we're seeing violations of existing trade agreements that have legal status. Is there not a court of appeal internationally that Canada could invoke? I've heard that question, and I've never really heard a very satisfactory answer, because it seems like none of these rules apply anymore. Can you respond to that?
Yeah, absolutely. So I can touch on that, and others can add their questions in the meantime. So quickly, the US, there are appeals ongoing of the president's executive power to impose tariffs, and specifically under what's known as the IEEPA, that International Economic Emergency Powers Act, that he's using to apply tariffs on Canada, and on the his general tariff against other countries also. Reciprocal tariff, that's the word I was looking for. That was successfully challenged at the Court of International Trade in the United States, which is a federal trade court. That has currently been appealed, however, to the Federal Circuit, which is a higher level court in the United States. And so they're currently reviewing it. But while that appeal is continuing, the tariffs are allowed to remain. Okay, so what that means is it's working its way through the courts. It's probably going to take a year before it's sorted. It might actually go to the Supreme Court, in which case it'll take even more time. But for now, the first decisions are that this is illegal, but it's going to take some time to sort itself out. So if I was an importer, and what we're advising is don't, bank on this, right? It's fine to think that maybe this will go away, but it'll take a long time. And there's absolutely no certainty, especially because the US courts right now, especially at the Supreme Court, are very Republican friendly. In terms of other international appeals, so there is the World Trade Organization. I used to litigate for the government of Canada at the WTO in Geneva. And in fact, I brought cases against the United States back when the United States respected the WTO. The short of it is that the appellate body, which is kind of the Supreme Court of the World Trade Organization, no longer functions. It's been blocked by the United States. So while other countries continue to litigate cases, the US is really not abiding by these rulings. So there's very little chances of success that this will all get solved through litigation when against the United States. There can be litigation. There is going to be litigation through the CUSMA itself, for lack of respect, but realistically at this point, the US administration simply doesn't care, and that simply gives Canada the right to retaliate. And they don't seem like, well, we're going to retaliate one way or another, whether we win, because it's so blatantly contrary to the trade agreement.
And William, just a quick question on the legal side, because I see there's a bunch of them in the Q&A now. Just one more quick one that I know will be on the minds of some people. There's some contractors on the call. Can you confirm, when it comes to how manufacturers and distributors handle, like you talked about, getting it right and classifying correctly and applying the right value. Sometimes they get it right and sometimes they maybe don't. Is the only court of appeal when it comes to those trade relationships within our distribution channel for contractors basically to shop elsewhere or to go, if people feel like they've been mistreated, this is not really a legal matter. Can you confirm that this is more just a business transactional kind of
so it comes down to it's a good point. I mean, there's commercial power, right? In many cases, like you're trying to pass on a tariff to a customer, there's no one that will tell you you're not allowed to pass on the tariff to a customer. Or if a supplier says, hey, you're paying 25% more because of tariffs, and you're looking at your supplier and you're saying, well, bullshit, I don't actually see, pardon the language, but I don't actually see a tariff being imposed here on your product. Why are you adding a 25% surcharge for tariffs? That just comes down to commercial power and bargaining, right? So there's nothing that you can say as a matter of law other than challenge pursuant to the contract that you have, right? Contract law that governs. But if your contract is silent on that point, then you might actually, it just comes down to contractual and bargaining power. Yeah.
Okay, thank you for confirming that. Matt, sure. You guys want to read some of the questions in the Q&A?
Yeah, asking you shall receive. We got a bunch of them, so let's do some rapid fire. It was mentioned that the freight and transportation costs should not have duty on them. Is that freight cost of the imported item only, or does that include any freight that might be buried in the cost of the good that the exporter is passing along, i.e. cost of freight from China to USA and Canadian imports from the USA?
No, it's freight from the point of direct shipment to Canada. So normally you're looking at kind of like, if it's made in the US, it would be kind of almost your Ex Works factory gate price. If the product comes from China, it would be the point of direct shipment from the United States to Canada that would matter, that you take out that portion of the freight.
Is there a list of granted or applied for remissions applications that one can view by HS code?
Yes. So it's all on the Government of Canada website. You can easily pull that. I can even do it on the fly probably in a second and drop it in the chat. But for the latest batch of remissions, that was the first batch granted by people that applied, the Canada Gazette definitely has it. So the Canada Gazette is the Government of Canada's kind of like newspaper that publishes. So it's available there. It's basically through an ordering council. So you can look at the ordering council website and the Canada Gazette, and they're all there.
Yeah. Apologies if we double up. I just want to make sure I'm reading these in case there's different nuances. Is there a public domain to check on any remission codes already granted?
Yeah, so same answer. So it's the Government of Canada has its own website that shows kind of those remissions that it granted. Those are also in the Canada Gazette and the Ordering Council. So.
Thank you.
And there was one published recently that does not include any products of our sector. I think it's just to, if anyone's wondering about that, so far we've not seen any relief for our products of our sector.
Is the remission for input goods retroactive to a certain date? If so, which date?
it is retroactive, and it's retroactive to the date at which the tariff was imposed, right? So if it was a March 4th tariff, then it's retroactive to March 4th. If that product became tariffed on March 14th, then it would be retroactive to March 14th.
Thank you so much. Great. What are the legal implications of misclassifying goods under tariff codes?
Great question. So you will get audited by CBSA, and then you will fail that audit, and they will redetermine the right tariff code, and then your tariffs will become payable, which is what you would have paid anyways, right, if you had properly classified it. The danger is twofold. It's not just that you'll have to pay what it would otherwise be payable, but it's some penalties. Now, normally the penalties are relatively low. These are administrative monetary penalties. They're a few $100 per occurrence normally, if you've never been caught on anything before and you have a clean record, a few $1,000s. But then you kind of become blacklisted by CBSA, and you end up getting audited every year after that, right? And so, and it's a huge hassle to be audited by CBSA, and normally you have to go back and fix all your records, and it can take months of work with your customs broker, and you basically have someone, you know, on your team working full-time on this. So it's really, you'd have to pay the tariffs that you otherwise would have paid. You have some penalties, relatively minor normally, and then you get blacklisted and frequently audited. I will say, though, just to be clear, there is the possibility of like criminal charges if you've blatantly circumvented the tariffs. If it's a mistake, it's in the normal course, you got it wrong, that's fine. That happens all the time. But if they find evidence of, you know, circumventing the tariffs, then they can lay criminal charges.
Wonderful. Thank you, William. And thank you for the great questions, everyone. Let's get to as many as we can before you have to go, which I believe that's shortly. Is there any way to get remissions when a vendor is giving a price increase as they are the importer of goods? Or would they be the only one able to file for remissions?
So any party in Canada can file for a remission. It doesn't have to be the importer. And so you can technically, if you're a wholesaler that buys from importers, you could actually do the remission yourself. But you would need, it would be very rare that it would be granted unless you had the consent of the importer for that. Normally, you'd want at least some sort of support letter. You'd need the business number of the importer in any event. So we often we work with, you know, distributors and wholesalers to apply, and we'll say, okay, the importers are this company, this company, and this company, and here's a general statement of support, or they support the application.
Maybe one more before you have to go. If an HS code is specifically listed in a Canadian retaliatory steel tariff, but there's also a Chapter 99 exemption, is that item exempted? Like your wheelchair example, if it is made of steel and is subject to a retaliatory tariff, but is listed in Chapter 99, does the tariff need to be paid to Canada when the wheelchair is imported?
No, so if it's in Chapter 99, then the Chapter 99 will govern and make that product tariff-free in the normal course. But the Chapter 99 are use-based tariff exemptions. And so that's an important kind of nuance to understand. It's like, it's for use as a disability-related good. For example, and what I was saying with respect to wheelchairs. If there's a tariff related, if there's a Chapter 99, it'll be for use in something, like for agricultural use or for use in manufacturing or something of the sort. So you got to really make sure that you're understanding the end use of that product really well if you're going to rely on a Chapter 99 tariff. But yes, the Chapter 99 would apply to a retaliatory tariff that would otherwise be payable.
Thank you.
I'm going to jump in, Matt, to say, just to share with the members on the call who might be wondering what the status of HRAI's generic request for gas furnaces was. I did some inquiry last week, and I got the answer that kind of reflects what William was saying. And basically, they're saying the time frame. I'm going to read it. We aren't able to provide a time frame for processing remission requests. The time frame will vary depending on the complexity of the case. Remission requests made on the basis of short supply are subject to consultation with relevant domestic manufacturers to verify the conditions of domestic supply. Decisions of the Minister of Finance and subsequently the Governor and Council are also required prior to the remission taking effect, all of which to say we've not gotten an answer. My question for William, connected to that, is our generic requests on behalf of the industry regarding gas furnaces, would that be, if granted, would that make it automatically a Chapter 99 exemption, or is it time limited, or like what would be the conditions on that remission?
Yeah, so it could be one or the other. Normally, it could be that the government grants you the request wholesale and just says, yep, this HS code no longer has a tariff payable. Because there are some domestic manufacturers, especially if they take a really strong stance against the application that you've made, then it's possible that what the government might do instead is give you a Schedule B remission that might say, okay, well, it's available for 18 months, for example, and then hopefully everything's gone by then for the importers. So you might actually get punted into kind of a secondary tariff with some conditions attached to it. I think that's probably your most likely outcome, just off the cuff here.
Thank you.
William, I know you got to go.
A lot of really, really good questions, but unfortunately,
Yeah.
I do have to jump. I'll say USMCA goods are not exempt from reciprocal Canadian tariffs. I think that's really an important question. Our products going south are exempted when they meet USMCA preferential tariff. That's not the case coming north. But otherwise, really good questions, and I'm happy. I think my contact information is on.
Yeah, why don't we put the slide back up with the contact info, Matt, and we'll wrap it up with that.
And anybody can email me, please do. Happy to have conversations. If you don't have trade advice by trade counsel, we're happy to act for you. There are great trade lawyers out there. Also, it doesn't have to be us, but you should get good legal advice around this. And customs brokers are good, but they generally don't get down in the weeds in the same way. It's just not their business model. So start with your broker, but move on from there. So happy to help anybody.
Thank you so much, everyone. I know we got some questions left unanswered, but these are the contact information, and I'm sure we'll be back on here with more updates as they develop.
Thanks, everyone.
Great. Thank you so much, William, Martin, and to everyone who joined us.
Thank you all.
Have a great day.